Hey, what's going on? My name is Anthony, also known as Lending Bent. I am a loan officer here in the great state of Florida. I help people obtain mortgages to purchase real estate for primary, secondary, vacation, and investment properties. So if you ever have any questions or you're considering purchasing a house here in Florida and need some financing, reach out to me. I'd love to help you out. Today, in this video, I'll talk about a series of things that pertain to real estate as well, but also just current events and what's going on. First thing that I do want to talk about is the World Series. Right now, I know the World Series is going on is with the Dodgers and the Yankees right now, and I believe the Dodgers are leading right now. But one thing that I want to talk about with the World Series is that it brings a lot of traction to certain areas where the World Series is being hosted, just like the Super Bowl, the World Cup, stuff like that. Like, for example, we had Tom Brady come to Tampa, Florida to play for the Buccaneers. We had a lot of people that were Patriots fans or longtime Tom Brady fans come to watch the Super Bowl and the playoffs, or come watch the Super Bowl here in Tampa. And it brought a lot of people from out of state, from up north down here. And I believe that is also a huge reason of why the growth in Tampa grew so much, because there was a Super Bowl hosted here. People love sports. People come here on vacation to see the Super Bowl, and they come from all over, and they end up loving the area. They say, you know what, we should buy a house here. We should get an investment property here, or maybe a condo. So when we come down here to Florida, we have somewhere to go, stay, enjoy ourselves. But World Series, World Cup, and different championship things that are going on, it helps this, not only just the state, but the city or the area where that event is taking place. For example, I know at one point the Olympics was hosted in Atlanta, Georgia, and that brought a lot of people to that area because the Olympics was hosted there, and there was a lot of infrastructure being done at that point to build up the city. And it brought a lot of people that wanted to move to Atlanta, that wanted to buy property there. And it's very similar to the same thing that's going on with the World Series right now. There might be some people that don't watch baseball like that, and they decide to go to one of the World Series games, and they're from, let's say, Louisiana, but they somewhat just want to experience life, and they go to one of the World Series games, and they end up falling in love of the area where the series is being hosted, and they say, you know what, maybe I should buy a condo here, buy a second home here, or maybe investment property. It's not bad of an area, or move entirely. So these things do bring good attraction to the area. So I know sometimes people say, what I heard when the Super Bowl was being hosted here in Tampa, a lot of people were not a fan of the traffic, or there's too many people here. But at the end of the day, if you own a home in that area and people want to move there, that helps increase the value of your home over time. So it's a win-win for you, although you have to deal with some of the short headaches of traffic and stuff like that during that time. Over time, you're winning in other areas, such as if people continue to move, then your value of your home goes up, the demand for your home goes up because people are moving there. So if you decide to sell at a certain period of time, then that's a good news. If you don't and you decide to stick there and pay off your property, you know your value of your home is still going up. You have a lot more equity in that home. So it's a good thing to have these championship games in your area, and consider looking at it as a positive light, sometimes not a negative light. Another thing I want to talk about is PPP loans. So I know recently there's been a lot of talk of PPP coming out with a list showing businesses that received a PPP loan, and they're also going after people that committed PPP fraud. The reason why I want to talk about that a little bit, from my understanding, there was an article where a guy received a PPP loan and he was going out and buying real estate property, and people were saying, oh, how are you able to do that? Well, his business was set up a certain way where he was able to use that money to invest in real estate and also write off in his taxes and stuff like that. So he didn't really do anything fraudulent because that was already part of his business plan before he got the PPP loan. Now, individuals that, for example, you're in the cosmetic industry and you got a PPP loan, and all of a sudden you use that money to buy a Maybach or something like that, then that's going to be an issue. And the reason why I'm bringing that up, because let's say if you had assets in place before you got that PPP loan, so you're in the cosmetic industry, you got the PPP loan, you already own 3 houses prior to getting that PPP loan, and let's say you did something fraudulent, they want their money back. So if they can prove that you did something fraudulent and they go after you, they're gonna want you to liquidate your assets to pay back the money. If you can't, then there's other repercussions that are gonna happen based on that. And I have seen in an article, of course, not firsthand, that individuals had to sell their home or all their homes or all their properties to get that money together from the equity to pay back the PPP loan so they didn't go through worse situations where they had to go to jail and stuff like that. So if you are someone that was doing that, I would definitely say looking to getting that money back to them as fast as possible, because they are taking this pretty serious. Another thing that popped up in the news is pretty much breaking news in the sports world, going off topic a little bit in the NFL. DeAndre Hopkins is with the Chiefs, which I think the Chiefs, I don't know how they're doing it. I don't know how they're picking up all these people and all these receivers. I mean, with D-Hop, with the Chiefs, that's definitely going to open up the playbook a little bit more for the Chiefs, because they need that extra push right now, especially I know they have 2 receivers that went down. So with D-Hop coming in, it's actually a good play for them because they could open it up more. It probably would allow Kelsey to be open more on the field and D-Hop to get some plays his way. Although, D-Hop is one of the greatest receivers in my book. I would say he's one of the greatest receivers right now. People may not agree. I do think he's one of the greatest receivers up and coming of all time. I would say he's probably top 15, top 20, just because his history proves itself. I mean, I haven't seen any other wide receiver go through so many quarterbacks and still put up consistent numbers. And Kansas City, I want to talk about that. With sports teams also helps the community as well, because if you look at the Kansas City Chiefs, now I know at a certain point, a lot of people maybe weren't moving to Kansas City, that area as much, but with Patrick Mahomes and what the Chiefs are doing in that area and winning Super Bowls and going to the playoffs consistently and setting records and breaking records and all these magical plays that you haven't seen, it's bringing a lot of people to that city. A lot of people want to move to that city. There's people that moved away from Kansas City and now they're moving back. The infrastructure there is growing. It's different from 20 years ago, 10 years ago. Now you have the Kansas City Chiefs that are doing so good in the community. They have to make sure the areas around them are also pretty good. And when they start the infrastructure of building that area, people want to move back. People move there. When they go visit the Kansas City Chiefs to play maybe their team or rival team and end up falling in love with the city or in that area, people tend to move back because they love the scenery, they love the team. So sports teams do play a large factor in the community development as well. So that's something to think about as well. Especially when they're Super Bowl or championship games that are happening there, like the national title for college is, let's say, it's happening in Florida. The Super Bowl is happening in Florida. The Stanley Cup is happening in Florida. And let's say the World Series is happening in Florida. People tend to look at that and say, okay, all these championship games are in Florida. Maybe we should go to one of these games. Florida seems like a pretty good experience. And they come to Florida, they check it out. They end up loving the beaches, loving the area. And they say, you know what, let me buy a second property here. Let's move from where we live right now and move to Florida, because there's so much going on here and the development and infrastructure that's happening, and they end up falling in love and staying. So moral of the story and what I'm saying is championship games and championship teams do help build the area. So it's something to really consider and look into. I want to talk about do's and don'ts. So getting back into the mortgage, right? Things that you should do, things you should not do. Things that you should not do when you're obtaining a mortgage. Do not quit your job. Do not go gamble your down payment money. Do not buy your furniture before you close on your home. Do not lend money, borrow money, give somebody money. Don't do these things when you are purchasing a house. And these are just a few, because these things can pop up and delay the process when you're purchasing a home, right? If you go and gamble your down payment money, you think, okay, I play poker on my phone. I'm a great poker player on the app. I want to go to the Hard Rock Casino and play poker with $5,000 of my down payment money. I need $10,000 to close, but I'm gonna gamble $5,000 because I can double it and I'll have 15,000, right? Some people have that mindset. They think, all right, I'll have enough money. Go to the casino, you lose it all. Now you had 10,000, now you have 5,000. You had 10,000 saved up in your account. You took 5,000 out to go to the casino. You lost it. Now you're at 5,000. You're short for closing. Yes, there's ways to set up different options to help you close, but think about it in a situation where you don't have these options. And the options that I'm referring to is down payment assistance. Let's say, you get down payment assistance to get 100% financing. What if you don't qualify for it? What if your scores are too low for you to qualify for another program? And the $10,000 was the best program and best option for you and your family. Now you're in a pickle. Now you have to extend the contract. Now you have to ask family to gift you money and stuff like that. And it could delay the process. And not only delay your process, you're also putting your deposit, depending on the amount you put on your earnest money deposit to hold that property for you as you agree to obtain financing. Now you're at risk of losing that money, depending on how much that is. So let's say that's $1,000, right? That you put as a deposit to move forward with the property. And you went, gambled your down payment money, half of it, and now you're short for closing. You go back to the seller and say, I need more time. Seller may ask why. Realistically, I've never heard anybody say, oh, well, my client or a real estate agent tells someone else, like, hey, yeah, my client gambled his down payment away, but I think you should extend the contract to give them more time to get the money. A seller is probably not going to move forward with that. They're going to say, okay, well, they clearly are not serious about moving forward. We're going to cancel this contract and put it back out on the market, but we're going to make claim on the deposit. There's so many things, there's so many variables that can happen. So I recommend don't do that. And I know I've had people, I made videos in the past and comments, and people will look at me and say, that's not true. People don't gamble their down payment. I have seen it happen personally. Don't do it. And when I mean gambling, I mean gambling. So not just going to the Hard Rock, but let's say right now crypto's up. I have people that put a bunch of their money in crypto, and I don't know what crypto is going to do tomorrow. Let's say the same situation. Person, instead of going to the casino, they took $5,000, put it in crypto. The following day, let's say crypto crashes, right? Hopefully not, but let's say crypto completely, Bitcoin crash. They put all their money in Bitcoin. They put the $5,000 in Bitcoin. It crashes. Now, it crashes. They're still short. Do you go back to the seller and say, hey, my client put their money in Bitcoin and it crashed. Can you give them extra time so they come up with the money to close on this house? I would say 9 times out of 10, a seller and a listing agent is not going to be very happy about extending a contract because of that reason. So you're still putting your money, your deposit at risk. Another thing, quitting your job. I understand if you start the process of obtaining a mortgage and you and someone at your job have a serious disagreement, it's important for you to look at it and say, alrighty, I'm getting a mortgage. I'm working on obtaining a mortgage. I need to make sure that all my ducks are in a row. Everything is good to go. My credit is good. I have my income, down payment. I'm good to go. If you quit your job and you don't have another job lined up, especially in the middle of the process of obtaining a mortgage, we will find out. Because we have to do a verification of employment. We have to do a verbal verification of employment. We may request your most recent pay stub and say, hey, we need your most recent pay stub. And you tell us, oh, I don't have the most recent pay stub, or we do the verification of employment and they tell us, oh yeah, John Smith quit yesterday. Now it's the issue. Now we have to call you, figure out a new game plan. Hey, did you get another job? Is it the same line of work? What's going on? Because if you don't have any income coming in, you're not going to get approved for a mortgage, right? Because lenders and banks are not going to lend you hundreds and thousands of dollars if you can't afford it. It's an extreme risk for them. So they want to make sure that you can afford it, you can pay for it. So when you're in the process of obtaining a mortgage, please do not quit your job. That's one thing. Please don't do it. I've seen that happen. Do not do it. It's going to cost you more stress And my whole purpose and my whole goal is to make the process as smooth as possible. I try to make it so smooth that people forget that they're getting a mortgage, or they don't remember. They say, oh, how I know Anthony gave me an update a day ago, but he hasn't requested anything. He hasn't. All I got papers, disclosures to review. Numbers look good. I'm not even worried too much. That's the whole goal. I don't want people to worry because I understand how stressful the process can be. So my goal is to make sure it's not as stressful. So definitely don't quit your job in the middle of the process. That's something that I would say do not do. That's a huge no. The last thing that I would say is gifting money to someone or lending somebody money during the process, right? Let's say you're in the middle of the process of purchasing a home and you say, your sister calls you. You have $10,000 in your account. You need that full $10,000 to close, right? For reserves, down payment, everything. That's the full amount that you need to show in your bank account. And your sister calls you and she says, hey, I need $8,000 because I have to buy a car and my law settlement money hasn't came in yet, or my lawsuit money has not come in yet, and my lawsuit money, once I get that in my account, I'll pay you back. It's too many transactions going on, so an underwriter is going to question that. So let's say you have the $10,000, you give your sister the $8,000. Now you only have $2,000 in your account. You give the money to your sister does whatever with the money. She receives her lawsuit money in her account, and she pulls the money out cash, $8,000, and say, hey, brother, this is the money that you let me borrow. Here you go. Here's $8,000. And you go, you take the money and you deposit it into your account. That's a red flag, right? Anything cash within an underwriter's eyes is a red flag. Now, it depends on the amount, but in this situation, with you having an $8,000 cash deposit, an underwriter is going to question that. They are going to want to know, where did this money come from? Why is it cash? And in the guidelines, cash is not bad, but an underwriter and lenders would look at it as a negative thing. Okay, yes, you received $8,000, but it's cash. It's untraceable. They need to be able to trace everything, especially when you're in the middle of the process of purchasing a home. Remember, you're under contract. You have $10,000. You gave $8,000 to your sister. She paid you back, but in cash, and you deposit it into your account. Once we get that updated bank statement, that's going to be an issue, right? So that's why it's very important when you're working with the loan officer, especially me, well, my goal is to build a good relationship with my client so that they feel comfortable sharing information to me, so that we form a game plan so that it's not a big issue when, let's say, you give that money to your sister and you're getting the money back. We know how to structure the game plan where it will not be an issue. If it is an issue, is when you deposit that cash. We want to make sure that we eliminate as many speed bumps as possible. So make sure if you're doing something like that, you consult with your loan officer. Especially if you're working with me, just let me know so we know how to structure everything so it works perfect for you. Less speed bumps. The do's that you should do when you are purchasing a mortgage or obtaining a mortgage. You need to make sure your credit's good. I always say the higher the better. So if you're a 640 and higher, you're good to go. Yes, there are loan programs. You can get a mortgage with a 500 credit score. It's a different down payment. So you can get a mortgage with a 500 credit score, but you have to put a higher down payment, 10% at least. Now, if you're purchasing a property at a 580 credit score, yes, you can purchase a property. However, you need a down payment, 3.5%. That is going to be standard. That's what you're going to have to come up with closing. Down payment assistance programs. Are there programs out there to help you at that credit score? Yes. Are you going to qualify for all of them? Maybe not. It's going to depend on your debt to income and everything else that's going on. So it's very important to consult with your loan officer, preferably me, so that we can structure that game plan and make sure everything makes sense, especially if you're at a 580. Now, if you're at a 600 or let's say a 620, you're at a 620 you can qualify for some down payment assistance programs as well, but it's also going to depend on your debt to income ratio and everything going on in your game plan. So that's why it's important to form that game plan. Now, the sweet spot for down payment assistance is 640 and higher. When you're at a 640 and higher, you open up the room for more programs to qualify for. Now, they're still going to look at your debt to income ratio. But if you're at a 640 and higher, you can say, okay, across the board, I qualify for majority without even looking at my debt to income ratio. At a 640, I know I qualify for pretty much all of the down payment assistance programs, right? Then it comes down to play, okay, you're at a 640, you qualify for the programs. Now, what is your debt to income ratio? What's going on with your credit? What's your debt to income, stuff like that. They want to make sure you qualify. The next thing I would say after the credit is your debt to income. They're going to look at your debt to income. Okay, is it too high with the down payment assistance? If it is, you're not going to qualify. You have to pay some stuff down or show more income. Now, let's say your debt to income is low. Your next phase is the income. If you make way too much money, that also takes away some programs. So some programs may not lend you the best features on that down payment assistance program because they are going to say you make too much money. Some of the best programs, if you make too much money, you won't qualify for. So ones that are mainly forgivable, let's say you make $500,000 a year, you need down payment assistance, you're buying a house in Florida for, let's say, $300,000. Some of the programs will say, okay, based on your debt to income, it's low. Good. You need down payment assistance. Okay, we're looking at your income. You make too much money for us to forgive your down payment assistance that we will give you, but we will grant you the money, but you have to pay us back the money. It's not forgivable. So it's all going to depend on your situation. That's why it's important to form a game plan and connect with a loan officer, preferably me, so that we can help you form that right game plan to make it work for you. Another do is making sure that you work with your current employer for a good period of time, right? Underwriters look for 2 years or more. Two years or more with an employer shows consistent, shows that you're going to get paid, you're going to continue to get paid, and it's less of a money. Now, in the last 2 years, let's say you worked at 4 different jobs, right? That's also a red flag that an underwriter will look into a little bit more. If they're all 4 different jobs in 4 different industries, that can cause a problem. But it has to make sense. Let's say your first job, you started 2 years ago, you're making $50,000. Your second job, $80,000. Your third job, $40,000. And your fourth job, $50,000. It's a lot of fluctuation going on there. So they want to make sure, okay, this person is jumping from jobs quite often. Do we want to lend money to this person? It's all going to depend on everything else, credit, down payment, stuff like that. It might cause an issue, but that's why you need to form a game plan. A game plan is extremely important. I'm always going to mention a game plan because I've always played sports, and you can have the best players on a team, but if there's no game plan in place, there's no way you're going to win, right? If let's say, for example, you took the Warriors, very talented team, and there's no game plan, you just told them, hey, go out there and play, and you put them against the Wizards with a really good game plan, I'm willing to bet that the Wizards are going to win because they have a game plan. They put things into play to execute. Whereas the Warriors, they're going out there and just, do what you want, no game plan, right? It's not going to work. So a game plan is extremely important. And especially if you're more truthful with your loan officer, it's better for us to form the proper game plan and make it make sense during the underwriting process. So it's less headache. It's less headache for everybody, for you, loan officer, the realtor, title, everything. So the process is as smooth as possible. So update with the hurricanes going on in Florida. We had two hurricanes that came through Florida, pretty bad. I would say that we're right now still picking up debris and trees that fell down and stuff like that. We are not 100% yet. Another thing that I really noticed is insurance companies are going through it right now. everybody that I know work for an insurance company right now. They're working overtime. They are working around the clock. A lot of insurance companies are having to pay out because damages to the property, flood insurance. If people have flood insurance on their property, they're paying out. And from my understanding, I haven't seen any insurance company go belly up yet, but I do see it possibly may happen for the smaller companies, but we will see. But it's very interesting. You know, a lot of companies, insurance companies, are not paying out. They're trying to deny claims and stuff like that, which is, you know, it's sad. Some situations, people truly need to get their property repaired. In other situations, people are just trying to beat the system. But I would say right now, what I've noticed, a lot of insurance companies not a lot, but a good amount of insurance companies are not paying out based on the repairs and stuff like that. So if you are in that situation, reach out to me. I might be able to help you with a FEMA application or help you in the right direction to get the proper help that you need to get your property repaired and get you in the right situation or back on track. So reach out to me. I might be able to help you out. So real estate in flood areas. So one thing that I've noticed, some areas in Florida that I have never seen flooded ever in my life since I've lived in Florida, flooded these past 2 hurricanes. So one thing that I noticed that will happen, usually when something like this happens, FEMA will update the criteria or the zoning for flood insurance. So I wouldn't be surprised in the next year or the next couple of months, they update the zoning for properties in flood zones. They might remove some properties that were in flood zones, and they might add properties in that flood zone mix. So I wouldn't be surprised if properties pop up in a flood zone. So if you are someone that bought a property and let's say 10 years ago, you never bought flood insurance, never had flood insurance, and your property flooded in these past 2 hurricanes in Florida, there's a very strong chance in the next couple of months or in a year, once the zones change, you might be required to get flood insurance. So if you are in that situation, then, you know, feel free to reach out to me. I am not an insurance agent, but I do work with insurance companies that we use to get our clients quotes that can help you